Welcome to the deep dive. We're going to be diving into the stock market today. Yeah, the stock market. We've got a whole bunch of reports, some expert analysis.
And it's pretty fascinating because on the surface, things might seem calm.
You know what I mean? Like, pretty chill.
There's actually peacefully
A lot of action going on.
Right.
Behind the scene.
Yeah, and we're going to try to figure out, like, what does that actually mean? What does that mean for investors, for
Exactly.
just regular people trying to understand, money,
Exactly.
finances?
Yeah.
So first thing that caught my eye, S&P 500 hit a new record high. Which seems a bit odd when you think about all the stuff we're hearing about President Trump's, tariff threats.
Yeah.
It's like, is the market just kind of ignoring the possible downsides right now? It seems like investor optimism is outweighing those concerns right now because you've got strong corporate earnings and there's this expectation that the economy is going to keep growing.
Okay.
And that's fueling a lot of this positive sentiment.
Right.
Yeah.
Well, and we've got some thoughts here from Adam Johnson.
Okay.
He's a portfolio manager of the Bullseye American Ingenuity Fund. And he's suggesting that there's actually a bunch of cash, like sitting on the sidelines just ready to be deployed.
Yeah.
Which might explain why, when the market dips, we see it come right back up.
Right. He's basically saying buy the dip.
Right.
Which is when the market drops and then investors come in and they see that as a buying opportunity and it drives the price back up.
Okay.
And Johnson is really interested in those high-growth companies. In particular, he pointed to Supermicrocomputer, SMCI.
Oh, SMCI.
Yeah.
Yeah, they're big in the whole AI world, right?
AI.
Weren't they the ones that had some issues a while back?
Yeah.
So like some accounting irregularities?
There were allegations driven by a short seller primarily, but then an independent review cleared them of any wrongdoing. And so now what's happening is there's something called a short squeeze.
Okay, so
Explain
that
it
to me.
Well, those who bet against the stock are now having to buy it back
to cover
their position, which is driving the price up even further.
So wait. So people shorted the stocks thinking it would go down, but now they're being forced to buy it.
Yes.
So that pushes the price up?
Even more, yeah.
Okay. Wild.
Yeah.
Okay, I see.
So even though the stock has rallied a lot, Johnson believes that XMCI is still undervalued.
Okay.
And he's pointing to their low price-to-earnings ratio.
Now, hold on. For those of us who are not, financial experts, break down that price-to-earnings ratio.
Sure. So basically, that's just a measure of how much investors are willing to pay for every dollar of earnings that the company brings in.
Okay.
And so a low PE ratio can sometimes suggest that the market is undervaluing a company.
So a lower number.
Yeah.
Potentially a good deal.
Exactly.
Okay. Gotcha.
Yeah.
Okay. What other companies is this Johnson guy into?
Well, he's also bullish on NVIDIA and Google.
Okay.
They're kind of bucking this trend of slower growth in tech.
Oh, interesting.
So he thinks that, with that strong growth potential and relatively low valuations, they're looking pretty good right now compared to some of those other tech giants, that are trading at much higher prices.
Okay. This makes me think about inflation, though.
Yeah.
Like, how is that playing into all this?
Absolutely.
Like what the Fed's doing.
So the Federal Reserve is in a tricky spot because they're trying to balance concerns about inflation with what those tariffs that we were talking about earlier, how those are going to play it.
Yeah. Well, and we've got Atlanta Fed President Raphael Bostic, and he's talking about some of the bunkiness that we've seen in inflation data.
Yes.
Like, is this just like a temporary thing, or is this actually like a trend?
That's the big question.
That's the big question, right?
Yeah. And he seems, he's worried about how consumers are going to react.
Right.
Because everyone's already kind of fed up with these higher prices.
Right.
So if things keep going up, people may not be able to tolerate that.
Yeah. So is the Fed thinking about more rate hikes, or are they just kind of watching and waiting?
So they're in what's called a restrictive posture, which means that they're keeping the interest rates high to try to cool the economy and control inflation. So that can impact you directly because, if you want to borrow money for a car or a mortgage, it's going to be more expensive.
Right.
So right now they're holding steady, but they're watching very closely to see how things develop.
Yep.
Yeah.
And we've got Eric Rosengren, the former president of the Federal Reserve Bank of Boston. And he seems to be on the side of let's be more cautious before we think about easing up at all.
Right. He's saying, with all this uncertainty around policy changes, like tariffs, immigration,
Right.
it makes sense for the Fed to just wait and see how things unfold.
Right.
And he's saying the trend might actually be downwards for inflation,
Okay.
Absent these policies.
Gotcha.
But because of the current situation, we need to watch carefully.
Okay, so a lot of watching and waiting from the Fed.
A lot of watching and waiting.
Got it. What about like all the big tech companies,
Yes.
The Magnificent Seven, whatever they call them now?
The Magnificent Seven.
Are they still like, running the show?
That's where things get interesting.
Okay.
So they're still contributing to the market gains, but they're not as dominant as they were a couple years ago.
Okay.
So we're starting to see kind of a shift.
Right.
Yeah.
Well, we've got some analysis here from Liz Ann Saunders, and she's showing how the rankings of like returns within the S&P 500 have actually been changing. Like NVIDIA, for example, has fallen from its top spot.
Yeah, and Dave Mazza, the CEO of Roundhill Investments, he actually thinks that this could indicate a rotation away from U.S. equities.
Oh, wow.
And towards international markets.
Interesting.
So he's looking at Europe in particular, where the sectors are a little more cyclical and not as dominated by the tech industry.
Okay, so a shift away from the U.S. being the center of it all.
Yeah.
That's interesting. What about the job market? Any big changes happening over there?
Well, there are some major shifts that I think we need to pay attention to.
Okay.
That employee-favored environment that we saw post-pandemic, that's starting to kind of like go away. And the balance of power is shifting back towards employers.
Oh, interesting.
Yeah.
So we've got some info here on President Trump's return to in-person work action.
Okay.
And it seems like there are a lot of companies who are really pushing to get employees back in the office.
Yeah, like we're seeing examples like Chase Bank and Stellantis.
Okay.
They're like mandating it.
Right.
And even Forbes had an article called The Great Office Return. Will 2025 be the end of remote work?
Wow. Yeah.
So it's definitely a growing trend.
So much for the work from home dream, right?
It seems that way.
Like, is this just like a power play by companies, or is there something else going on?
I think it's a little more nuanced.
Okay.
There's a lot of different factors, but it seems like the change in government policies is kind of influencing this cultural shift away from remote work.
Okay.
And, the economy being a little uncertain, companies might be thinking more about output and efficiency. So they think maybe being in person will help with that.
Right. So not just about being mean, it's about like a combination of...
A little bit of nostalgia for the good old days.
Right, exactly.
Yeah.
Water cooler conversations.
I see that. It's a complicated situation, but it's important to see all those different perspectives.
Okay, point taken. What else is kind of jumping out at you and all this stuff? Anything particularly surprising?
I think there's been this surge of interest in these individual stocks, and especially those that are experiencing what they call a short squeeze.
Okay.
So that's when like a heavily shorted company, their stock price like skyrockets, and then those who bet against it have to buy it back to cover their losses.
Like a pressure cooker.
It's like a pressure cooker.
It builds, and then boom.
Exactly.
Explosion.
Yeah. Okay. And we're seeing that like GameStop is a really good example a few years ago.
Because that's a short squeeze?
Exactly. And it's not just a thing of the past. So recently, Hims and Hers, the telehealth company, their stock has surged over 184% this year.
Wow.
And then you've got Carvana, the online used car retailer. They've also seen some pretty impressive gains. Even with, some recent pullbacks. So short interest data from companies like S3 Partners, that can be a really good resource for understanding these movements and finding potential short squeeze candidates.
So lots of volatility.
Yes.
But also opportunities.
Yes.
Do you know what you're looking for?
Exactly.
Okay, gotcha. Anything else we should hit before we move on?
I think we need to talk about the potential defense budget cuts.
Okay.
Because that's causing some uncertainty in the market right now.
Defense budget cuts. Okay.
Yeah. Give me the details. So there was a recent Washington Post report that revealed that Defense Secretary Pete Hegseth had instructed senior Pentagon leaders to cut 8% from their budgets over the next 5 years.
Okay.
And this, caused some concern.
8%? That's a lot, right?
It is.
Okay.
And it especially caused concern for defense contractors like Palantir. Their stock dropped 10% following that report.
Wow.
Yeah. Okay. So
what are the implications? I mean, is this just a cost-saving thing, or is there like a bigger story here?
that's a good question.
Yeah.
So to give us some perspective, let's look at what Patrick Murphy,
Okay.
he's a former congressman.
Okay.
And the host of the Yahoo's Finance Warrior Money podcast.
Okay.
He has expressed some concerns about the potential impact this could have on national security and, importantly, on veterans.
Okay.
Yeah.
So that's a whole other angle to this, right? Like
Exactly.
what specifically is he worried about?
Well, he's saying that these cuts are coming at a time when there are still significant threats to the country and that they could negatively impact veteran care.
Okay.
Especially, suicide prevention.
Right.
And I think this really highlights the human cost of these decisions.
Yeah, it's easy to get caught up in the numbers and forget that there are people affected by this.
Exactly.
So we've got market highs, concerns about tariffs, the potential shift away from U.S. stocks, changes in the job market.
Yeah.
Now, defense budget cuts. A lot going on.
A lot going on. And that's why I think it's so important to stay informed and really understand how all these seemingly separate things are actually really interconnected.
Yeah.
Whether you're an investor, an employee, or just someone trying to make sense of the world.
Right.
We need to understand the bigger picture.
Yeah.
Yeah.
I'm already feeling a little overwhelmed, but also kind of excited to learn more, That's
the spirit. It's easy to get bogged down with all this information.
Right.
But what's important is to focus on those trends and insights that are really relevant to your situation.
Okay.
So think about what resonates with you and what questions you're left with.
That's a really good point. Like making it personal.
Exactly.
And applying it to your own life.
Exactly.
Okay. I like that. So on that note, let's actually move on to a discussion about those changing dynamics of the job market.
Let's dive in.
Because we touched on the whole return to office thing, but there's clearly a lot more to unpack there.
There is.
Yeah, so what does this all mean for employees, for job seekers, just people trying to figure out their careers and all this?
Well, there are definitely challenges, but also opportunities.
Okay.
The key is to stay adaptable, stay informed, and really focus on building those valuable skills that are in demand.
Right. Okay.
So we'll talk about some specific strategies and resources to help you navigate all of this change.
Awesome.
Yeah. So we were just talking about those big shifts in the job market.
Right.
And one thing that's really standing out to me from these sources is this potential change in corporate culture.
Okay.
Especially when it comes to DEI, diversity, equity, and inclusion.
Right, right.
It seems like some companies have been scaling back their DEI programs.
Yeah, I noticed that too. Is it connected to the changes in government policies that we were talking about earlier?
I don't know if it's a direct cause and effect, but it does seem like there's a broader cultural shift happening, and maybe the government's stance on certain social issues is influencing that.
Right.
So we're seeing companies like Meta, Walmart, even McDonald's.
Wow.
They're reducing their DEI initiatives.
Okay, so what does that actually mean? Is it a step backward for equality in the workplace?
It's complicated.
Right.
There are a lot of different perspectives on this.
Right.
Some people argue that it's a necessary correction to shift away from focusing on group representation and go back to focusing on individual merit.
Right.
But then others see it as, a worrying trend.
Right.
That could reverse some of the progress we've made.
Yeah, it definitely raises some questions about what role the government should have in shaping corporate culture, right?
Exactly.
So what do you think this means for job seekers?
Well,
especially people from, underrepresented groups. What should they be looking for?
I think it's even more important now to really research a company's culture and their values.
Gotcha.
Before you accept a job, look for those signs that they're actually committed to creating an inclusive and equitable workplace.
Right.
Check out their website, read employee reviews, ask questions during your interview.
So don't just assume.
Don't just assume.
Do your homework.
Do your homework.
Got it.
Yeah.
Okay. Well, we've covered a lot today, from market highs to tariff worries, changes in the job market, and now this whole ice shift.
It's a lot.
It's a lot to take in.
It is.
So is there anything else we should highlight before we kind of move on to the last part of our deep dive?
Yeah, I think there's one more piece of the puzzle that I think is especially relevant to our deep dive today.
Okay.
And it's, how are all of these changes impacting individual investors?
Right.
People like you who are trying to, manage their own money and make smart financial decisions.
Let's talk about that. what should people be paying attention to right now?
Yeah.
Because honestly, it's so easy to just get overwhelmed and
Yeah, it is.
want to bury your head in the sand,
I get it.
With all the volatility, the uncertainty.
Yeah.
It's a lot.
It is.
So what do we do?
Well, I think more than ever, you need to focus on the fundamentals.
Okay.
And not get caught up in the hype or panic of the daily market swings.
Right. Okay.
Because investing, remember, it's a long game.
It's a marathon, not a sprint.
It's a marathon, not a sprint.
Okay, I like that.
Yeah.
It's a good reminder because it is so easy to get swept up in the emotional roller coaster of the market with all the news and the opinions and everything.
Yes, it is.
So practically speaking, what can people do to stay grounded and make smart choices?
Okay, so first, you need to understand your own risk tolerance.
Okay.
How comfortable are you with the possibility of losing money? Okay. Don't chase risky investments if you're not prepared to handle a potential loss.
Right.
Second, diversify your portfolio.
Mm.
You know that saying, don't put all your eggs in one basket? It's especially true now.
Okay.
Especially in those volatile sectors like tech or those that are impacted by government policies. Spread your investments across different asset classes and industries.
Classic investing principles, right?
Classic investing principles.
But it sounds like they're extra important now.
Extra important now.
Okay, what else should people be thinking about?
Do your research. Really understand the companies that you're investing in, their long-term prospects. Don't just buy a stock because everyone's talking about it.
Right.
Look beyond the hype and make sure you understand the underlying business.
Gotcha.
And its potential for growth.
Mm-hmm. Okay.
And, this is a hard one, but patience is key.
Oh, yeah, that's a tough one.
It's a tough one.
Especially these days, right?
Especially these days.
Like everything's so instant gratification.
Exactly.
Social media, everything's happening so fast.
Exactly.
Right. But
you're not going to get rich quickly. It's about making informed decisions, staying disciplined, and writing out those ups and downs because they're inevitable.
They are.
Yeah.
Okay.
So
the other words of wisdom you want to impart on our listeners before we move on?
Here's something to think about. How can individual investors use their unique perspectives and insights to make smart choices?
Okay.
Because it's easy to just follow the crowd,
right?
But sometimes the best opportunities come from thinking differently.
I love that challenge.
Yeah.
Trust your gut. Do your own research.
Yeah, exactly.
Don't be afraid to go against the grain.
Yeah, exactly.
That's kind of empowering to think you don't have to listen to the experts all the time.
Exactly.
You can use your own knowledge and experience to make decisions, even if it's different from what the experts are saying.
Exactly. And remember, investing isn't just about the numbers and the charts.
Right.
It's about understanding the world around us and how those events are shaping things,
Yeah.
That's what makes it fascinating.
I agree. It's like a constant learning process, right?
Yes.
You never stop.
Never stop.
Learning. That's what the deep dive is all about.
That's what it's all about.
Not just passively consuming.
No.
But actively engaging.
Yes.
And trying to make sense of it.
Yes.
And see how it all connects.
Connecting the dots, seeing the bigger picture.
Right.
And using that knowledge to navigate your own financial path.
Okay, so we've covered market trends, economic shifts, the tech breakthroughs, changes in the job market.
We have.
And talked about what it all means for investors, for employees.
Absolutely.
And throughout our deep dive today, we've really been emphasizing this idea of, staying informed, thinking critically.
Adapting.
Yeah,
absolutely.
This has been great.
I'm glad you're enjoying it.
Yeah, I'm feeling very energized by all this information.
That's good.
But I have to admit, a little overwhelmed, too.
I get it. It's
a lot to digest.
It's a lot to digest,
so, as we start to kind of wrap up this deep dive, what is one final thought-provoking question you want to leave our listeners with?
Okay.
Something for them to kind of ponder as they continue their own exploration.
I like that. So here's one.
Okay.
How can we as individuals harness the power of technology and innovation to navigate these complexities of the financial world and create a more equitable and prosperous future for ourselves and our communities?
Wow, that's a powerful question.
Yeah.
It's like a call to action.
Yeah.
It's don't just observe what's happening,
right,
but actually participate in shaping the future.
Yes.
we have agency, right? We have the power
I do.
to influence the direction.
Yes.
Not just be swept along by the current.
I love that. That's what makes this whole thing so exciting.
Yeah.
You know, it's about embracing the possibilities, taking some calculated risks,
right,
and working together to create that future
right,
where everyone can thrive.
That's a great note to end on. But before we say goodbye, I do want to remind everybody that this is just the beginning of the conversation.
It is.
Right.
It is.
Keep exploring. Keep asking questions.
Absolutely.
You know, share your thoughts and your insights.
We're all in this together.
Right.
The more we learn from each other,
yeah,
the better equipped we'll be to navigate these challenges
right,
and seize those opportunities.
Okay, so we've explored, like, the macro trends, you know, markets reaction, impact on investors.
Yeah.
But I'm thinking about, like, the average person, like the employee, trying to navigate this changing job landscape, you know?
It's a tough landscape right now.
Yeah. What's the takeaway for them?
Well, the big takeaway is that the balance of power is shifting.
Okay.
That post-pandemic, employee-favored environment, it's fading.
Okay.
And there's a real push for that return to the office.
Right. We were talking about Chase and Stellantis telling their employees, like, back to the office?
Yeah.
But what about someone who, you know, loves working remotely? Have they just got to, like, suck it up and head back to the cubicle?
I don't think so necessarily.
Okay.
You know, while some companies are being pretty strict about it,
right,
others are being a little more flexible.
Okay.
So it really comes down to, like, doing your research and being thoughtful about it.
Gotcha.
You know, job seekers should be looking at a company's policy and deciding if that's going to work for them.
Right. It's not a one-size-fits-all situation.
It's not.
Okay. Any other advice for people trying to navigate this job market, especially with all this talk of a recession?
Yeah.
It feels like things are getting a bit shaky out there.
It does. Yeah. I think now is a good time to really focus on skills development and adaptability.
Okay.
You know, like what skills are in high demand, even with this recession talk.
Okay.
So maybe it's coding, maybe it's data analysis, maybe project management.
Right,
you know?
right.
Take an online course, get certified, make yourself more attractive to employers.
Like adding more tools to your toolbox.
Exactly.
Right, so you're ready for anything.
Exactly.
Okay. We've also seen how, like, you know, certain sectors are getting hit harder than others.
Right.
You know, the defense budget cuts.
Yeah.
The uncertainty in tech. Like, how can people kind of, like, position themselves to weather those storms?
I think one good strategy is to consider diversifying your skill set across multiple industries.
So don't limit yourself to just one.
Don't just limit yourself to one. Exactly. That way, you know, if one industry takes a hit, you've got those other skills. It's like having multiple streams of income.
Okay, so spreading the risk.
Spreading the risk, having options.
Options, okay. What about salary expectations? Should people be adjusting what they're asking for?
That's a good question.
Yeah.
You know, I think it's wise to be realistic.
Right.
You know, we saw that surge in wages when the market was so employee-favored, but that might be slowing down.
Okay.
So research those benchmarks. Be prepared to negotiate, you know, based on your experience, the value you bring.
Right.
Remember, you bring a lot to the table. Your skills are valuable. Don't undersell yourself. But also be aware of the market.
Know your worth.
I know your worth.
Be realistic.
But be realistic,
Got it. Okay, so we talked about adapting to remote work, developing those in-demand skills, being realistic about salary. What else should people be thinking about? Like, what are some red flags?
Red flags to look out for. You know, company culture is more important now than ever, you know?
Yeah.
With this shift away from DI programs, you really got to understand a company's values and commitment to inclusion.
Okay.
You know? So look for companies that actually align with your personal beliefs.
So how do you do that? During an interview, how do you really get a sense of that?
Ask questions.
Okay.
Like, don't be afraid to ask them. How they're committed to diversity and inclusion, work-life balance, employee well-being. Pay attention to how they answer.
Got it.
You know?
Got it.
Their answers, their attitude. It can reveal a lot.
Okay. And just the overall vibe.
The overall vibe, yeah.
Like, do you feel comfortable?
Yeah. Do you feel welcomed?
Welcomed.
Yeah.
Okay.
Does it seem like a place you can thrive?
Okay. I love that. Being proactive and trusting your gut.
Trust your gut.
Got it. Any other tips for acing those job interviews?
Oh, yeah.
Because it feels like a lot of people are out there fighting for the same positions.
It does. You know, I think you should highlight your adaptability.
Okay.
And your willingness to learn. companies want people who can pivot, embrace new challenges. So showcase your problem-solving skills, your critical thinking abilities. Those are like gold.
No.
And remember, it's a two-way street.
Oh, that's right.
You're interviewing them too.
Yeah.
Make sure they're a good fit for you.
Okay, so as we wrap up this deep dive,
yeah,
what's like the key takeaway for anyone listening who's, maybe feeling a bit overwhelmed by all this?
Absolutely. I think the most important thing is to stay informed, stay adaptable, and be proactive. Don't bury your head in the sand. Embrace the challenges. As opportunities to grow, develop those valuable skills, research companies advocate for your needs.
Advocate for yourself.
Advocate for yourself. Exactly. Yeah. You have the power to shape your career.
That's a great message. A message of like
empower.
Yeah.
Resilience.
Yeah. Like we're not just passive bystanders.
No, we're not. Right.
Like, we can adapt and thrive.
We can.
Even when things are uncertain.
Absolutely.
Okay. So any final thoughts before we sign off?
I know, just stay curious, stay engaged, just stop learning. You know, that the world is changing so fast.
It is.
And the more we understand those changes, the better we'll be at navigating them.
Right. Knowledge is power.
Knowledge is power.
So keep diving deep.
Keep diving deep.
Keep exploring.
And keep asking those questions.
Keep asking those questions.
Till next time, stay curious and stay informed.
See you next time.